we're going to talk about how to use the sentiment index. I'm going to show you guys how to take some really awesome killer trades using sentiment. So I think this will be really, really great. Also want to give a shout out to those of you watching this on YouTube or on the recording on the website. Want to say hello to you guys. Really excited about this call today. We got a lot of good trades we are taking right now with the sentiment index. That'll be kind of a theme this week, I think, and then want to show you guys the ins and outs of sentiment and kind of what to expect as far as like the types of trades you'll take, the time frame of like what time frame works best, risk management, all that kind of stuff. Before we get started, as always, excuse me, need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, let's go ahead and jump into this. So today, like I said, I want to go over sentiment. So let's first talk about what a sentiment index is. Let me go ahead and pull up here. Let me pull up the AI and we will go over what a sentiment index is. Okay, perfect. So got that pulled up here. Okay, let's ask it. What is a Forex sentiment index? Okay, and we won't read everything. We'll just kind of go over the basics. Okay, so Forex Sentiment Index is a tool to gauge the collective mood or sentiment of traders in the foreign exchange market. It measures the percentage of traders who are bullish, expecting prices to rise, versus bearish, expecting prices to fall on a particular currency pair. This index is valuable because it gives insights into whether the majority of traders are buying or selling a specific currency, which can be a useful contrarian indicator. That's basically what it is. It even gives you some, the AI has given us some examples of some popular sentiment indexes. You've got Daily FX. They have they call it the SSI, Speculative Sentiment Index. IG Client Sentiment. So IG is a broker and they take sentiment data off of how their traders are trading. In fact, here I'll show you. Let's do this Daily FX sentiment. So you can see theirs right here. Looks like, see, can I click on this? Does this take me to it? I wonder if they started doing this on a mobile app now, because I think I saw something that said that they no longer offer this for free. Yeah, no kidding, because this stuff works. So you might not be able to go to this one to get their data anymore, but there's another good one. Let's go back to the AI. And oh, that's not the one. Where's the, oh, here's the chat GPT we had pulled up. Okay. You can also use IG. Oh no, Daily Effects. No, no, they're the same. They're the same ones. Now you can do there's other places. I actually have some bookmarks of some other ones like this one with FX Blue. This is one of their this is a good sentiment index right here. This is actually a really good one. Here, I'm going to give you guys this link in the chat box for those that want it. We also have stuff on our website too. We have a couple of places we actually get sentiment data. So this is a good one. Let me give you another one. This is actually not a bad one right here. Here's forexclientsentiment.com. I don't know where they're getting this data from, but this is actually another pretty good website where you can get sentiment data. And then I'll show you the one on our website. We actually have two of them. So on Steve Scanner right here, we actually have our own sentiment data that we collect. And you can view that right here on Steve Scanner. It'll even give you signals based off of where sentiment is positioned. And you can filter it by the most long versus most shorted currency pairs on the Steve Scanner, which is really cool. So here's the link to Steve Scanner for those that want it. And then you also have this one right here. This is probably, I actually like this one better for short-term trading. I will tell you this, the one on the Steve Scanner is a little bit delayed Not a lot, but it is some. I think it only updates once a day. Um, so it's best used for more of a longer term perspective of sentiment data, which Steve Scanner already functions that way anyway. When I went shopping for data for the scanner, it was one of the only options I had. Otherwise, I would have used like if I could have used the data on my FX book, I would have. But I when I went shopping, it wouldn't integrate into the scanner, and so that was like a programming issue when I was trying to put together the scanner, and so I had to use this one because it would actually integrate. And so I'll just let you know that up front. It's a little delayed, but it's not delayed in the sense that it would provide bad signals. It provides great signals so long as they're used in context of a longer term trade. If you're trying to scalp off this or get more up to date information, my favorite sentiment index is this one right here. So if you go to free tools and go to the sentiment at the very bottom of free tools, this is a really good one. This is powered by MyFX Book. They've given us permission to use this on our website. So thank you very much, MyFX Book. And so yeah, so it's pretty cool. This updates in real time. I think it's not more than 15 minutes delayed at most. And so this is actual data. And the cool thing about my FX book is actually the biggest third party verification of forex traders on the planet. So nobody has more data than my FX book outside of maybe some brokers like Owanda. But even then, I think my FX book may have more comprehensive data. Usually, traders on my FX book are active traders, scalp minded traders. So you have kind of a lot of the same type of traders who are on my FX book. Usually more active traders. It's like I said, very comprehensive as far as the amount of traders that they have because no other place uh, collects data more than my FX book. And so there's a lot of reasons to like my FX book, in my opinion, as far as getting data goes. And so that's another reason why this is my favorite index. I wish the one thing I wish I could tell them if they're listening, I don't know if they're watching this on YouTube, but um, I wish there were more ways to filter on their website because, like, even on our website, I don't have a lot of filtering options and they don't either. And so I'm sure if they had them, they would give us the ability to filter. But no, you have to kind of go looking through here. You can't, like on Steve Scanner, you can just filter through, like, okay, this is the top one, this is the bottom one, like easy, done. This one, you have to kind of comb through. But it has some advantages. Like I'll go over some of the things that this one provides that some of the others don't. So, for example, when you hover over, um, yeah. So I mentioned Stanford says, is this sentiment tool updated frequently? Yes. My FX book is updated in real time, and I don't believe it ever gets more than 15 minutes delayed at most. And so it's great. I love their tool. But one of the downsides to it is, like I said, you can't filter. And so you have to every day or every few times a day, how often, I don't know how often you trade with this, but, and I'll show you how I trade with it. But when you come in here, you're going to have to comb through which ones are the most biased. Um, because those are usually the ones we want to trade with. And I haven't gotten to that part yet. But I just wanted to show you what indexes to start, what they look like. What's one of the cool things though that they do have is you can hover over a currency pair and it will give you a profile. So you can see right here over the euro dollar, it's got this profile. It says euro dollar action. It says either short or long, and then it will give you the percentage. So of all the traders that are connected to my FX book, 8% of them who have a position on the euro dollar are short, and 91% of them are long right now. That equates to about 74,000, almost 75,000 contracts, guys. That's absurd. By retail traders. That's why I'm saying this is the most comprehensive book out there. I don't know any. I know. I think one of the reasons why they publish that information is just to kind of show their competitors, look how big we are. So, yeah, 75,000 contracts. And then it tells you at the bottom there of that box, it says 41% of traders are currently trading Eurodollar. So, of all the traders who have trading accounts connected to my FX book, 41% of them have positions on the Eurodollar. And of those 41%, 91% are long and 8% short. So that's a huge amount. That's a crazy amount. So a lot of people thinking the euro dollar is going to go up, right? Yeah, and that has the other part of it too. So Stanford says euro dollar looks most popular also. Yep, 100%. Yeah, it's euro dollar is the most popular forex pair as well. So yeah, it totally makes sense. You have about 6,671 contracts short right now. As of as like a singular position goes, you have it says 19,793 positions short versus 172,593 positions that are short. I don't really look at that one as much. I just look at the percentages. That's been fine for me. And then they have another cool thing here. It shows you symbol popularity. So it just kind of shows you how many people are actually trading it. You know, USD CAD has 20% of traders trading it. You got the Euro Aussie and only 4% of traders have positions on the Euro Aussie. So you can kind of see the drop off when you get to pairs that aren't traded as often. Here's the franc yen, only 2% of traders have a position there. Yeah, so obviously the euro dollar is kind of the big deal. Here's gold. 19% of traders have a position on gold. Yeah, kind of crazy. So, all right. So let's okay. So now that we've shown you like what an index looks like and what it is, how do you use it? Okay, so let's go over what this is. So, like, kind of how you use it. So, another thing that's important to know before we dive in how to use it, this is collecting data on what is called dumb money. So, dumb money is basically retail traders. Retail traders are people like you and me. I'm not saying you're dumb. I'm not saying I'm dumb. It's just a collective. It's what the banks have called us. Okay. And we don't have to call ourselves that, but that's what the banks who rule the markets, that's what they've called us. And basically, the idea with dumb money is that dumb money moves in crowds. Okay. So this is a true concept like in nature as well. So everybody kind of follows the crowd. Like this happened in like during 2020, everyone went out and bought certain items at the store collectively. And so a lot of items at the stores ran out at the same time. And it took time for those things to kind of come back. That was a crowd think mentality. The same thing happens when, like in 1929, the stock market collapsed. And so a lot of people pulled out their money out of the banks at the same time. Everybody just went on a bank run. Um, uh, the Another way to look at this is like animals do the same thing. Like when animals run away from prey, they run together in the same direction. They don't usually split up. They just kind of think that they're safer if they're in the crowd. Okay. Which sometimes that's not necessarily the best thing to do, right? Especially in like the financial markets, doing what everybody else does um, doesn't always equate to profits, especially when it comes in terms of picking the direction of the market. Um, okay, so with that in mind, when you see most retail traders, for example, on the euro dollar going long, and, you know, you got the crowd going one direction, over 90% going the same way, that tells us that retail traders are obviously number one buying the euro dollar, but that also tells us that the euro dollar is going down. We can make that assumption without even looking at the chart. We can make the assumption that the euro dollar is going down. Why are we so confident in making that assumption? Well, we can do that because um, retail traders, what they do, the way they gather together to buy or gather together to sell is they look for premiums and discounts. So what's a discount? A discount is when you see something that you perceive to be discounted, right? Like if you go to the store and you go to buy something and you perceive it as discounted, like if you like for me, I like to go buy steaks. I've got a big black stone grill and I like to just cook steaks a couple times a week. And so um when I go to the store, like I'm going to go this afternoon later today and look for steaks. And if I see a deal, I'll be buying a few. If I don't see a deal, then I might just buy one, right? But how do I perceive a deal at the store? Well, I perceive a deal when I see the yellow tag or the orange tag saying like, hey, if you buy this, it's gonna be cheaper or whatever. So that's how I perceive a discount. Um, same thing when you go to the store, they might say like buy two, get one free or buy one, get one type of thing to kind of entice people to buy things. That's how we perceive discounts, right? Now, in the markets, how do we perceive discounts? Well, as a collective group, as dumb money, when we see the market going down, we perceive that as a discount because it's now the price is lower than where it was the previous day. So that must mean, discount. But the thing is that sometimes can be the furthest thing from the truth. Sometimes just because a market's going down doesn't mean it's just that doesn't mean it's worth your money. Maybe that market's just getting ready to keep going even lower. And that's the danger behind this groupthink mentality of I'm going to go with what everyone else is doing, right? Okay. So another reason why retail traders do this is because of you. I'm sure this is something every one of you has heard: buy low, sell high. That phrase you've probably heard that since high school or earlier. Buy low, sell high. Obviously, in order to make money, you do have to buy low, sell high. Nobody wants to sell low and buy high. That's not good. But the thing is, sometimes when a market's already going down, the market could still be at a high price. Let me show you an example. So if you go to the euro dollar, let's pull this up real quick. Let me pull up a higher time frame on the euro dollar. Or let's just kind of go out here. It's funny because like this market started to drop. Here, let's do a rewind, like right here. See, a lot of people might have viewed this, retail traders back over here, I'm sure they did this. They probably viewed this price as a low price. They're like, yeah, that seems pretty low. The market's at the lowest low it's been in the last, month or so. That's got to be a good price to buy. Wrong, right? Because what happened later? So as we just let this continue to do its thing, what happens to the price of this market? Well, it doesn't take too long, and all of a sudden we're actually at here. I'll let this go just a little bit longer. Um, There we go. Okay, I'll pause there. Now we're at a lower low, and so what we thought was a good price is actually not a good price, and the market just keeps going lower. Let's let this continue on again. Let's see what this, let's see what happens. So, assuming that this is a good price to buy at, because that's how, okay, pause, wrong again. So the market keeps going lower. So we thought that was a good price. Turns out it wasn't a very good price originally. We bought again thinking that was a low price, not a low price. That turns out that was a high price. We bought down here thinking this was still a low price, and the market just keeps on going. So I'm going to let this continue on to go a little further. So this is the problem: is that retail traders view here. I'm going to let this continue while I talk. So retail traders view this is how we perceive discounts as a collective group. I'm not saying you do this. I'm not saying that I do this, but as a group, just as a group mentality, this is how people perceive discounts is they say, hey, the market's going down or it looks like it's down. I think this is a good price to buy at. Turns out it's actually not. It's a trap after all, right? Okay, so here we go again. So everyone thought good price to buy. Turns out that in hindsight now, like a month later, that's a way higher price than over here. But in context, that looked like a low price. See, that's how traders view this. And then right here, you're like, that has got to be a low price. That's the bottom, right? Nope, not the bottom. That's got to be the bottom, right? Nope, not the bottom. And then it just keeps going down, right? And I'll just let this finish. It's almost done. I think we're almost to the not even quite. It's like, again, see retail traders getting trapped into thinking that this is the bottom. And again, it continues its way down and down and down and down and down. Right. Anyway, I think that's enough for that exercise. I'll pause that there. We'll go back to where the market is now. Right. So that's where we thought the market was low based off of retail trading glasses or retail trading goggles. So that we thought that was low. Turns out it wasn't. Thought that was low. Nope, wasn't. Thought that was low. Nope. Thought that was low. Nope. And that's how retail traders get to come with me here. That's how you get this. That's how you get 91% of retail traders long, is because you have people who started to buy over here and never let go of that because they had this high hope that this would come back. Many people will blow their accounts in this type of situation because they just keep on buying. This is a career ending type of anytime you see any one of these major currency pairs in the 90 percentile area, plus 90%, that thousands of people ended their careers. Like it's just every week, like clockwork, people end their trading careers because they don't know any better, because they've just been taught to buy low, sell high. But so we need better information, right? So that's where I want to go next, and that's where we're going to get to the part on how to use this correctly. Is we need better information on determining discounts and premiums in the market.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
And by the way, the same thing goes for the opposite side. I'll just show you real quick. Like USD CAD is at 96% short right now and only 3% long. So incredible how many people are selling the the USD CAD. So with this one, without even looking at the chart, where do you think that market's going? If I were to look that chart up on a 15-minute or an hourly time frame, yeah, exactly. It's going to be going up. By the way, that's a really important point to make. I just said on a 15-minute or an hourly time frame. So most traders who are on my FX book trade on they're scalpers to swing traders. Like most traders don't trade on a multi-month basis, although the banks often do that, like we don't. And so when you're looking at sentiment data, this is data to be traded on a 15-minute time frame or an hourly time frame. I probably wouldn't do a lot of 1-minute chart trading, although you can, or even 5-minute chart trading. I think the sentiment data is perfectly situated for gathering signals on a 15-minute or an hourly chart. So I just want to share that little piece of information. All right. So if you go to the euro dollar, or no, not the euro dollar, if you go to the USD CAD, let's see if Stanford's right about this. I know he is, but let's just go check anyways. So look at the boom, there you go. So it's up substantially today. And this week it's been up, or even this month. So this is how you get 96% of retail bot trading bias is you get markets that just go up and up and up and up and up and up, right? See, a lot of traders probably thought back over here, like this has got to be the high, or maybe this is the high, or maybe this is the high. And they're just wrong, wrong, wrong. They're just wrong every single time. Every single time they just get it wrong, wrong, wrong. Um, I mean, even back, I mean, I think this move started like back over here. Like you could have thought that that was a high price, could have thought that maybe that was a high price, maybe this was high, but it actually just keeps going up and up and up and up and up, right? So that's how you blow accounts is you just sell. I mean, that's how most traders blow their accounts is they sell into something like this. They get so overwhelmingly biased that they lose their trading accounts. So, okay, so now that we've set the stage here, I think we've done a pretty good job with that. Let's talk about how to use this. So, from a retail trading standpoint, I think it's pretty safe to assume that generally speaking, we don't want to follow retail traders. Okay. I think we'd all agree with that. You want to kind of get yourself out of this trap. Okay. You want to not be here anymore. Um, so how do you get yourself out of this and move on to a different way of looking at this data? Well, first, just don't. I think it's good to not just don't get so biased into a trade that you don't use a stop loss because a lot of those traders that are biased right now have given up on their stop losses or they've just thrown them into outer space, thinking that the market's going to fix it. Now, if it works, they'll get their money back and they'll live another day. At the end of this, when a lot of these are over, but for many, uh, their accounts may just blow up and they'll just quit trading forever. Um, so those are the two options that way. For you and me, let's not get in the habit of selling against the grain. I don't like to do that or buying against the grain, unless you have confirmation. If you have confirmation, like some kind of break of structure, liquidity grab, or something like that, like then I get a little more excited about the idea of selling something or buying something. But unless that happens, and I'm going to show you how to do that. But until that happens, you really want to stay away. And no one's exempt from managing risk. Even the best traders, even if you come really, let's say you become very proficient at this and you are able to determine which direction the market's going to go nearly every single time, you're still not exempt from managing risk. I think a lot of traders kind of get to this point of, once I get good enough at picking trades, then I really won't need to use a lot size calculator anymore. Or I won't need to put in a stop loss. And that's far from the truth. You still have to do those things even once you are able to kind of pick the market very, very well. Okay. So now let's talk more in depth on how this works. So the way I like to use this is a when you see a currency pair get highly biased, that's when the best trading opportunities come along, both long and short. And there's two different ways to look at this, and it's very important that we understand the nuances of this because um, there's a lot of interest in these currency pairs when they get highly biased. Usually, the currency pairs that are highly biased are going to have the biggest moves in the next couple of days. So something that's in plus 90%, something that's 95, like the USD CAD's at 95 or 96% right now. Those currency pairs are going to have huge moves. I don't know if you've been following the USD CAD today, but he has just been literally just, I mean just absurd. It's been crazy. So this started the day actually down here. I actually caught a trade on this and it got all the way up to here and now it's starting to pull back. I think it's starting to finally die out, but kind of crazy. So just know that that's a characteristic of currency pairs that get highly biased is you're going to have really big moves. And usually these are currency pairs that will go both directions and there's a reason for this, okay? So um let's go back to that. You know how I said buy low, sell high? So the banks also want to buy low, sell high. When the markets get highly biased like this, the problem is, okay, like for example with the USD CAD, okay, um, with the USD CAD, the banks want to sell this too. They're no dummies, right? Like they know that this market's going to be coming down. It's at a multi month high. They know that this is a market that it's going to be coming down. Like it may go a little bit further. Like maybe it goes up, to the like 139 area, 140 area, and then ultimately pulls back from up here. They know that too, just like you do. Okay. On this hourly time frame. They know this. Um, Here's the problem. If 96% of retail traders have all the short positions and they like they have a monopoly on the shorts, do you think the banks are happy about that? No, they're not happy about that because they don't want you to make money. They want them to make money. So they have to find a way, they have to devise a plan to get rid of your short positions and get you to willingly give them up and hand them over to them. So, how do banks do that? Like, how do they get your 96% of trades to transfer over to them? Well, a lot of the times they'll do this by having some pretty absurd moves contrary to what the retail traders are doing. So if 96% of retail traders, yeah, exactly, it'll go higher. Exactly. Stanford got it. Yep, exactly. So they'll try to send the market contrary to what the retail traders are doing for quite some time before it actually will reverse. Now, like I said, the end game goal is to reverse, like that's the end goal, but it won't be until after a bunch of carnage has taken place, like a ton of carnage. All right. So we're seeing that kind of activity happen right now in the USD CAD. I think Mohammed mentioned this morning that there was a pretty big YouTube channel, Forex trading YouTube channel, where this guy mentioned, like he said, sell your house, sell everything, and sell the USD CAD. And I don't think the trader's wrong. Like I'm going to back him up on that. I think he's right. That's what the banks want to do. The problem is that the timing's really, really off, and they're gonna get absolutely if they haven't blown their accounts this morning, they're gonna because the USD CAD may actually continue even higher for a time. I'm not saying it will, but it definitely could. Um, and I'm going to show you how to identify that. But so that's the way you have to look at that is sure the end goal usually if the market's at that high zone that it's probably because we're at a place of interest by the banks. And so what I like to do is I like to come in here. So I actually came in here last night and took a trade and I saw this highly biased market and so I'm going to do a replay on this. I'm going to go back to a 15-minute time frame. And I actually bought the USD CAD. So I went contrary to what the uh, traders were doing. And the reason why I felt pretty good about this is because I didn't feel like the carnage was over. Um, um, I didn't feel like the carnage was over. And why did I feel that way or know that? So I'm going to do a replay. So this is where the market was last night when I took my trade. So I looked at this last night, it was at 93 or 94% short by retail traders. But during this time, the market actually coiled up and it made this, we actually had a flag pattern right through here. We had a nice little flag right here. And then you had this pennant right here. And so all of this is price action that indicates further moves to the upside. That's not a price action that would help the retail trader, the 93 or 94% of retail traders who are going short. So I like to find, oops, let me fix that. I like to find currency pairs that look like this when they're already highly biased, because this usually means that there's nearly a surefire move that's about to take place to basically raid the retail traders. And so this is going to continue against them is the idea. So a good time to find this is when the market's off hours, like when you're in consolidation periods. So this was perfect because last night the market was on the USD CAD specifically. It was during the Tokyo Sydney market. That's a great time to come into these types of pairs, try to find that coil opportunity and ride that and continue to ride that up. And I cut my trade really short. I actually only targeted to about right here. That's where I took my profits on this because I thought that there was a chance that maybe it would pull back once it got up to here. It actually went way beyond that. Like I got my profit hit this morning before I had even woken up. And then this actually just kept going a little bit more before it started to pull back. That's my favorite way to use retail is to go against the retail when it gets highly biased, so long as the opportunity still looks good. Let me show you another example of one that I didn't trade this one. I was actually hoping to do this one in the group. If you go look at the New Zealand dollar, and I'm going to show you, by the way, this is one way to trade it. I'm going to show you guys another way to trade sentiment here. This is probably my favorite way. These are quick little scalps. Okay. You're looking just on a 15-minute or hourly time frame once or twice a day, probably mostly in the evening, I'd say is a good time to do it. You could also do it in the morning. The only problem with the morning is you're not going to have as many consolidation periods where the market's kind of coiling up to do that. By the way, why does this happen? I actually skipped something I should have said on the USD CAD. Why does the market do this when it gets to this point? So the reason why is because the banks know that if you have a sell position, your stop loss on your sell is probably like either there or probably just above this high right there. They kind of knew that. Like they knew your stop loss was there or maybe just above that high right there. Like they knew that. Um, and you knew that too, because that's just how retail traders trade. They put their stop losses around highs and lows, right? So why would they go after your stop loss? Because if you hit your stop loss, you got to understand the mechanics of the market, right? What is a stop loss on a sell? That's a buy. So you know how we talked about buy low, sell high? Well, when you hit your stop loss on your sell, you now bought high. And the banks now the banks sold low because somebody has to take the opposite trade, right? Think about that, right? It's mechanics of like trading. So you have retail traders who have all the short positions. The banks want those short positions. How do they get your short position? Send the market higher, like Stanford said, send the market higher on the USD CAD so that they can stop you out at those predefined support resistance levels. That's why the market often goes just above resistance or just below support all the time. It's because if the banks have a high interest in a currency pair and they have the highest interest on the currency pairs that are most biased, right? They want to go to the ones that are at 90+% on the USD CAD or the euro dollar. These are the ones that are going to be the most manipulated. So, people complain about manipulation. I'd rather just learn more about manipulation and how to work with it than complain about it. Like that's just my opinion. Let's just work with it. Because if you learn how they're doing it, then you can do it too. You can take advantage of it. That's just my opinion. All right. So again, back to the mechanics here. If most of us are hoarding, we have a monopoly on the shorts, but the banks want them, we have to stop out because if you stop out on a short, the mechanic of that is that you're buying. That's the framework of the market, right? When you close a sell, you have to buy to close. Okay. Same thing, like opposite when you're buying. Let's say you have a buy. How do you close a buy position? You sell. It's the same thing. You like go buy a car. You go buy a car. How do you get rid of your car? Well, you go sell your car. Okay. You go buy a house. You don't want the house anymore. How do you sell your house? How do you get rid of your house? Well, you sell it, right? That's how you get rid. So the opposite's true for shorts, right? In this example, if you're hoarding the shorts and the banks want them, the way they get you to get rid of them is to take the market higher so that they can hit your stop loss. Because when you hit the stop loss at levels that are so obvious, then they're able to take that away from you. Okay. And it's not like they took it illegally, like you were okay with that. You had your stop loss there. And so you were willing to get out of the trade there because they knew you were willing to get out of the trade there. Right. Kind of a crazy way of looking at things, right? But also at the same time, it makes so much sense. And it's kind of interesting that the USD CAD literally came just above the apex high. It literally manipulated right above the high. Look how long it spent above here. See, that would have been I didn't do that. I should have done that, but That would have been the best place to sell today, was basically everything above the apex high in no man's land, or what we would perceive as no man's land, was actually the burst. That was actually the perfect place to sell today. Was where nobody wanted to sell. It was where everyone was willing to get out of their buy. Um, it's just kind of crazy when you think about that. So anyway, so that's the concept. So now if we go look at this on the other side of the market, this was the New Zealand dollar. Here, if you look at sentiment, let's go and look at the New Zealand dollar. And I'm going to answer Anthony's question here. That's the next part of the webinar. So I'm going to get to that in just a second. But if you look at the New Zealand dollar, you've got 94% of retail traders who are long right now. That actually was at 90% earlier. It's increased as the New Zealand dollar has gone lower and lower and lower. Uh, that number has now jumped to 94. So 5% or 6% of traders have a long position or short position on the New Zealand dollar. 94% are long right now. So without even looking at that chart, which direction is that one going? Well, if 94% of retail traders are long, then that probably means that retail traders are buying, and that subsequently means that that market's going lower, right? So it's going lower. So if we go look at the New Zealand dollar, you can see on this 15-minute chart that in fact that's true. This market's been going down and down and down. In fact, I think yeah, it's been going down for a long time. Let's see, when did this start? So this big move to the downside began right over here on September 30th. So that's why I say you want to use a 15-minute or an hourly, maybe even a 2 hour, potentially, depending on how you have your candlesticks arranged, because some of these moves can last a whole month. And that's how you get the high biased of currency. So retail traders for a whole month or two have been accumulating all the long positions. They have a monopoly on the long positions. So now that they've lost all their money and monopolized they've now monopolized the New Zealand dollar. Now the banks are coming and they're saying, "Hey, we'd actually like your long positions. Would you give it to us?" And we're not going to give it away for free. So the way we give it away is either you make us profitable, number one. How do you make us profitable? If retail traders have a monopoly on all the buys, how do we give up our buys? We'll give it up two ways. We'll give up our buys if you make us profitable. Banks are like, nah, I don't want to do that. I mean, sometimes some retail traders who get lucky will actually, like if they're able to weather the storm of that move to the downside, eventually that move to the upside will come. And if they're able to hang on long enough, they'll actually be able to get out maybe for a profit or break even. Um, but the vast majority are not going to get profitable. And so how else do retail traders get out? Well, through their stop losses, or they're forced to get out through margin calls, right? Which, when do margin calls usually happen? In the middle of breakouts. That's when margin calls happen. So the banks have to go liquidity sweeping. They have to go stop hunting to create those types of breakouts, right? In order to, excuse me, they have to go stop hunting. They have to go liquidity hunting in order to create the move that they need, right? In order to get the retail traders out of the long position so that they can then go short, or vice versa. In this way, they need to get retail traders out of the long so that they can take over the long positions just in time for the market to finally go up, right? So with this one, this was a kind of an interesting one last night. So this was one that was 90% biased. It had formed a pretty nice little support level right here. This is a pretty obvious support. So this is the perfect recipe. So hear me out on here. This is how you find the best signals, guys. This is my favorite way to trade this. And then I'm going to show you another way to trade it. So find really good looking support resistance levels, structure points, or a coil up, a flag, that type of thing. Usually this will appear during off market hours. So this was perfect on the New Zealand dollar. So you had 90+% of retail traders already buying this, and then you had a perfect support level form. So this is where you can create stop hunts or liquidity hunts. Okay. Because now you have support that's perfect. So where do you think most of the retail traders who recently bought, not the ones who bought from like a month ago, but recently, where do you think the ones of the last like week, maybe 3 or 4 days who bought the New Zealand dollar, where do you think they put their stop losses? Probably just below, this low right here, or all of these lows, like this whole area. If you wanted to get really minute with it, just below that low would be perfect. That's probably where most people put their um, stop losses, is just below that low. And so when you see this type of thing, the chance of a continuation to the downside, so the retail traders continuing to get burned, is very, very likely. Very likely that they're going to continue the burn if that happens. Here's another way you can figure this out. I looked at this morning and I saw on the hourly time frame that this really wasn't a support level that was formed at a liquidity zone, right? Like when you draw a box from this place of support and draw it all the way to the left, that's not liquidity right there. Nor is that move, nor is that move. That's not liquidity. And so liquidity is found in places of consolidation. So if there were truly a place where the New Zealand dollar were to form a demand or liquidity, it would probably be in an area where in the past it was able to go up significantly, like right over here or like right over here. So this would be a demand zone right through here. So now if I draw this over, this is really where the banks wanted to go. So obviously they went stop hunting, but I think they actually might be headed all the way to this little box. I think this move's not done yet. I think it's going to go down to there before you get any sign of bullish support. It's probably just going to keep going lower to there. Um, very good. So the favorite way to trade this is to continue to go against retail traders when you see obvious support or resistance form. So in the case with this one, you have obvious support while retail traders are buying. That means that the market's going to keep going lower. With the case of the USD CAD, you have most traders who are clearly shorting 95% to the tune of 95%. But that market was coiling up and creating obvious resistance points. And so the chance of a liquidity sweep to go grab those, to basically stop out traders who got in short recently, very likely the market will do that. Okay. Okay, so now let's go over to the next last segment of this on how to trade with sentiment. So, Anthony says, do you know when retail traders hit over 90% bias during this current move? Or, oh, he says, do you know when? I actually don't know at what price you're going back to the USD CAD. I don't know where they went to 90% biased. I know it fluctuates too because I imagine that when this pulled back right here, I imagine that they probably um there's a pretty good chance that that got beneath 90% and then returned back to 90% somewhere along this move in the last week. In the last week, that probably returned back to 90. I just don't know when that happened. Okay, so here's the next thing. Now, this is a little bit of a curveball, so hear me out here. So, but at the same time, it'll make sense. So let's kind of go over that. So at some point, obviously we want to go against the retail traders most of the time. And my favorite trade, just so everyone knows, and I have already said this before, but is to trade against the retail traders so long as it's kind of a more obvious setup. We will take a lot of signals this week trying to take advantage of that. I will be posting signals as I see them that make a lot of sense. Um, with currency pairs that are highly biased, I will be looking for setups that I'll be able to get into this week. We'll take one or two, I'm sure, this week. That'll be pretty good. Now, at some point, retail traders are going to get their way eventually, and also the banks too, because after they've had their way with retail traders and the retail traders have lost for so long, eventually The banks have built up a sizable enough position that the banks are short at the same time that retail traders are short. Right now, like for example, the USD CAD, the banks are actively trying to enter shorts. They're trying to get into shorts as as it goes up, and every time it goes up and retail traders get stopped out, the banks are picking that up. But also, there's other retail traders that come in and join the party and continue to sell as well. And so that's how you're able to get retail and the banks selling at the same time. So eventually, the banks will have their way. They're done. They've been able to get the position big enough to the point where they're satisfied. They've built it up big enough. And then the USD CAD will start to come down. So that's the trade that everyone's been watching recently. I know a lot of people, a lot of eyes on this USD CAD right now. And it will eventually come down. It's true. And the banks are gonna be right there. So these trades usually don't just they're not just like a quick scalp trade. These are like pivotal trading decisions. Like this type of trading move is the type of move that will last for months. It could last many weeks at the very least. So there's a couple of ways to trade when you see banks get to 95% bias or so on, or not banks, but when you see retail traders get 95% bias, that does mean that that market is presumably going to be headed down soon. But you have to be very cautious with how you do that. We've already talked about why you have to be so cautious because the timing is usually terrible if you go in with retail traders when they're excited about shorting. Timing is really, really bad. But they're not necessarily wrong about the direction that the market's probably going to be going. So there's a couple of successful ways you can trade this. One way is to like if you want to trade that longer term sell USD CAD trade, you could do a modified martingale, which is to sell at the current price, and then every half an average daily range, you separate an order. You just add to the sell as it starts to come down. This is one way you can do that. Another way to do this, and that I mean that works if you're willing to be patient and you're willing to readjust your entries every single day. If you need help on the modified martingale, I have a couple of videos on the basic training library that go over the modified martingale, and it's really meant for people who are trading more longer term. If you want to have a more sniper-like approach, which is kind of more my style anyways, to be more of a sniper-like approach, you have to navigate in on this higher time frame, like an hourly or higher, and you have to find the most major liquidity zones and structure points. I'm right. So over here, I think people could have saved themselves a lot of money if they had just waited for the USD CAD to finish what it's doing. Because I actually don't think it's done yet. I think that this USD CAD is actually going to try to reattempt. Um, there's a big old high right here. I think it may actually go to that, or maybe even go just above it. So let's look at the most obvious liquidity zones here. Let me go ahead and turn on the order block detector. And sure enough, there is an order block right there. So there's an order block zone right here. I'm also going to include the area just above it because, that's probably a place where I would imagine there's going to be a stop hunt. So this would be a great place to sell if the market got up to that point. Otherwise, I would actually just keep trying to go against the retail trader until that happens. Or until you get breaks or structures to the downside, and then I would get into the short. But I'm happy to miss out on the I'm happy to miss out on shorting this on the way up. I'd rather short it as it's starting to come down, right? Okay, another obvious place where I think there's liquidity is basically this zone right here. That would be a good place to, I think, begin your short and be a kind of more sniper like. Actually, we're kind of there. You could do that. Here, sorry, guys, getting calls right now. You could do that, but I think there's a huge potential for this to still go up to this order block. So that's why I'm a little cautious to sell there or to sell at this earlier one right here that we just drew out. So I'm going to delete that one. I'm honestly not going to sell the USD CAD until it gets up to here, and then I would consider the sell. The cool thing about us as retail traders is we don't like the, unlike the banks, we don't have to accumulate a position over several weeks to get what we want. We don't have to manipulate to get what we want because our positions are so small that there's always liquidity to fill our orders. So I can wait and be patient for that order to fill. The banks, they have to start stopping people out and they have to start filling up their sell position. Um, Pretty much right now, they have to start selling so that if the market goes up to here, they can finish off their sell. And then when the market finally collapses, that's when they get all their money back. So the other way I would trade this, guys, if you're going to trade with the retail traders. So when you get highly biased, that does mean that the market is, the USD CAD is due for a move to the downside. But I wouldn't, there's no freaking way I would sell right there. No way. There's no way I would do that. Okay. I might sell up here. Maybe might sell at that zone that we drew out up there on the higher time frame, but there's no way I'd sell right there. However, what would get me excited to sell would be, let me show you how this would, let me show you how I'd get excited to sell. Let's say this pulls back and comes down and forms like a neckline right here. And then let's say it comes back up and forms another shoulder and you get a head and shoulders. Say this is a shoulder, head, and then you get another shoulder right here. Okay, well that's a good, now you're starting to see the breakdown of the USD CAD. It's finally happening. Then I would go ahead and be like, okay, I'll go ahead and sell there and put a stop loss above this high because we've already started to show signs of a breakdown. Or I would look for a break beneath this shoulder and I'd go ahead and start the selling there. Either would be fine, but right now we have no confirmation that this is ready to come down yet. Nothing, right? And that's the thing that nobody's talking about is, like if you were to just get into this right now, you've got no help. There's no way you're getting any help on this trade. Um, because this could easily just continue to fly up to there before it starts to come down. And actually, like I said, up there, I'd be fine to go ahead and start the sell because you're pretty much at a major level of liquidity and supply up at that point. Let me show you another example. So let's go the New Zealand dollar. This is eventually going to go up too. This is due for a move to the upside soon. Okay. The banks are trying to buy this. Retail traders are trying to buy this. Um, and every time this goes beneath a major liquidity zone, retail traders are stopping out. And the people like the banks are starting to fill in the orders where the retail traders lost. So with this one, right now, I would continue to go against the retail traders because why? We're not at there's no major support right here. I wouldn't call this like major support. The major demand or support is actually down here. That's where the major demand is. So that's where I'd get interested in going long with you guys is down there. And we can be patient for that. We don't have to try to force the trade now. You don't have to get in long now. But yes, down there would be a good place. Or maybe even like even this whole area would not be a bad idea to go long inside of here. But until then, the short is the go against the retail trader is the way to go. So you have to look at this in two different ways. You have to look at this from the perspective of yes, the overall, yes, I get it. The long-term move is to buy, and the retail traders aren't necessarily wrong about that. They're not necessarily wrong. Their timing is terrible though, right? And then so because of that, we have to use our trading skills to see where the market is relative to where they want to go. And if you're not at any major supply or demand, then keep going against the retail traders until that time. So for me, I would continue to go against the retail traders until you get to this. Down here, I would actually go ahead and go with the banks at that point, and I would start to build my long position inside of here. But for now, I would say just keep going against that. So there's other ones like this morning we took a trade that we're working on right now on the euro pound. This is one that I believe is going to be headed up here. The reason why I think this is one that's headed up is because this one is actually highly buy like most retail traders have a long here. So you might be like, why are you going with the retail trader? The reason why I'm doing long on this one is because I believe that the banks have already done their liquidity grab right here. They went just below this support level right here. They already grabbed the liquidity and the market's already headed back to the upside in a pretty aggressive way, actually. And so the way I see this one is one that would, um, like this one's starting to flip and the banks got what they needed. And retail traders have a lot of the I think this used to be at 95% or 90 something percent long. And now they're at 88% long now that the market started to go back up. So clearly the retail traders are already giving up on their long position. They're already giving up with just this little move to the upside. And they're going to give up even more on their long position and totally hand over their longs to the banks as this just continues higher. So anyway, I just wanted to share that with you. So I hope that helps you guys give you some at least some insight on how to view this. So in general, you want to go against, just in recap, you want to go against retail traders, is the idea. But you have to know where you are on the chart. You can't just blindly go against retail traders because sentiment says, okay, I'm going to go against retail traders. I mean, you can, there's ways to do that, but you have to, I mean, I'll coach you on that. Book a one-on-one call with me if you need coaching on that. But the best way to trade would be to know where you're on the chart before you hop in. And if you know that the market is coiling up or creating some major support or resistance level while retail traders are biased, then there's a really good chance that that market's going to keep going against them. And those are my favorite trades on sentiment. All right, guys. I hope that was helpful. Appreciate each one of you. Thank you for coming. Have a fantastic rest of your day, and we'll see you guys in the next webinar.